So I went out on a candlestick hunting tour this morning to see, trying to give candlesticks a try again, trying to get romantic about trading. And I mean, they're the best coffee table books are these Nissan books, big giant candle patterns. And some people think candle patterns are a cluster of things. Now, this is the classic engulfing pattern. And people will say, okay, that's a pattern. I got a reason to start thinking about some kind of trade, or, that's my signal, or that's my place to. I'm going to start drilling down to the small time frame. Of course, you're always looking for a scalp in the small time frame. I hope because the market can retest like 20 times. It seems like it, right? 4 retests. I've seen 5 retests. How long has a market gone sideways? That's a statistic, right? Maybe it goes sideways for just one zag. There's not even a zig, and then it just keeps tanking. It just keeps thrusting along. So here's the candlestick guy. Top dog trading. I had to speed up the video because it couldn't hang through his normal speed, so I'm like 1.5 times faster than normal. There's no trading on this video, even though it says candlestick chart trading, so I was duped into the thing from What Works Today. And he's going to tell you how, in the old days, there was this, that, and trading, and now there's electronic, but that doesn't matter, right? They just went from the pit, instantaneous. High-frequency trading was done in a pit, now they just do it off, on a computer. But it doesn't change the way the markets move. You make money. More guaranteed that you're going to make money because you can see the fills coming in on your broker, where in the old days, if you saw the quotes, it didn't mean that you were getting filled because your broker may not have a guy in the pit. It's a very illiquid situation. It could work in your favor, too, because nobody's going to fill you, and you survive some crazy spike, where now you're getting filled on all these spikes. So people are saying, hey, I'm getting stopped out on these wicks. There's a guy in a comment complaining about the wicks. What do you do about the wicks? Yeah. So my version of candlestick trading, and I've read all the books on it, and I was tortured by the story because I hate stories like Johnny gets on a train and he's got 5 apples and see how he's got an orange. How many apples and oranges are there at the end of the trip? I'm just like, can you just give me like the formula? I don't really want to, because now I'm thinking about, well, is the chick hot? Was it 2 dudes getting on a train? It would totally mess the math up, right? Always wonder about that. Of course, everybody that's trying to trade this stuff with the candlesticks has this engulfing pattern. So here's a description up from Top Dog Trader.
There's a couple ways that you can define engulf. So the most conservative way,
that's what I prefer, because the last thing I want to do is offend the market.
Best pattern, quote unquote, for the word best, is when the real body, that's the red part of that candle,
I always thought that was interesting, the real body as opposed to the fake body. I mean, you really got to get like a Zen. You have to start with the art of war. I love this. I went down that highway, right? I bought all the books, and I studied so hard. I saw a guy in the comment here telling everybody, listen, I'm a good student. I should be making money doing this.
Engulfs the entire body of the previous one. In other words, this is the open, and that's the close. That's the red part of it. And then at the very top, we have what's called the wick.
I call that the, I'm going to smother my girlfriend with a pillow.
Or the shadows, that's the high and that's the low of the bar. So the best patterns are the ones where the red part between the open and the close completely engulfs the bar before it, meaning it engulfs the high to the low of the bar. And this one does, and this one does. So that is the most conservative approach to an engulfing bar. Now, I do not personally require that it does that, because let me tell you, you're not going to find that very often. It doesn't.
Let me tell you. But go down to a smaller time frame, and it happens very often. And what I'm saying about this stuff that's completely ridiculous with these people, and you should see the comments, people praising this guy all day. 22,000 views this guy's got on this thing. Top Dog Trader. He missed the whole point of this candlestick trading, is that the small bodies mean something. Something's going to happen. You typically want to put a hedge on here, or you want to get in the market at the market and just say, hey, I don't know where it's going, but this is a high probability that we're not going to keep doging out. There's only 2 candle patterns. There's a
Doesn't
doji.
exist very often. In fact,
There's a doji, and there's a trend. So you have sideways market. That's just painfully obvious. Sideways market. Oh, they moved my sideways market, right? Low volatility, very important, and the body. So you have body volatility, which we can just assume there's a couple spinning tops or small bodies living inside a big body. These are big bodies. You can't trade this from a mechanical buy stop entry system unless you're willing to survive this much risk. This is how stupid trading is. That there's only one thing that really matters, and it's how big is this range? Can you get into this trade at the market? At the end of that session, put on a trade and put a stop on either side, or sell and put a stop on either side. Well, they stopped you out, right? But actually, you lost less. Notice it doesn't take much to build a trade plan. When you see the close there, you could buy and sell with a stop here. You never got stopped out. You got stopped out of this leg, your sell. Here's where you went. Now, this is a smaller candle than this. This is a inside bar. All the engulf is an outside bar. How many possible situations can there be in these markets? If you eliminate the open and the close and look at pure volatility, what's the trade here? Place buy stops. Or you're holding your short, and this is where the protections are at. Or place a sell stop. Every time you get a small ATR, it's going down. This is how dumb trading is. Oh, small A, just bracket this, right? That's a trend continuation order flow. That's all you need to know. You don't need to know the RSI or any of that stuff. From a mechanical standpoint, you would have a sell stop here, and yeah, that's an engulf, even though it went up. Who fucking cares? All you have to do is, this is a daily chart. This is eBay. That's why there's a big gap here. It's not Forex. Doesn't matter. You can see the markets are all the same. And there's just gaps on here. But if you sell here because you have a small body, you put a bigger trade on. You could even scalp out of that. Small body. Who gives a fuck if it's not a doji? There's only three things you can have here. The range, open and close. High and low, there's only three pieces of info there. The high and the low are two separate things that create a range. So people talk about highs and lows, but they never talk about the range. Here's a completely symmetrical triangle. Or sideways rectangle. That's the signal. Every candle has a signal here. After this engulf, what's the trade? You start buying new lows. Or you just start buying. You buy. Look, you waited long enough, right? Comes back to here to trap these guys. And then it goes down. Or it just fills this vacuum here. But not with this guy. It's a big complicated thing, and there's never a trade on here. I gotta speed the guy up, couldn't take it.
If you're, this is a daily chart, so you'll see them a little more in daily charts, but if you're an intraday trader, you don't see them very often except right at the open because of the massive volatility at the open. So I don't require that. Let me show you what I look for. So what I look for is simply a pattern like this right here, where the real body of the green bar engulfs the real body of the red bar. So you notice the high of the green bar is not above the high, and not even the close of the green bar is above the high of the bar before it. They're both lower, and that's okay to me. What I'm looking for is the the dominant value that the market found during that period of time, which is between the open and the close. The high and the low, those are the extremes, that the market actually rejected those values, and it's actually found most of the value within the open and the close. And so that's what I'm looking for, and you will find these patterns much more frequently, so that's another benefit. All right, so that's number one. You look for the engulfing, but now there's one more thing we need to look for, so let's go to that. So then,
well, he put a trade on there? Where's the trading come in? Can't he just bullshit us? Yeah, I bought down there. It's crazy.
Next issue here is, let's look at these two bars right here. Now, the real body of the red bar is engulfing the real body of the green bar, but look how long the wick or the shadow is on the bottom. This is a bearish bar, and yet it did not close near the low. It actually closed pretty close to the 50% range, a little below that. But what that means is that, yes, even though the real body of that bar engulfed the real body of the previous bar, the close of the bar was not near the low. I want to see it in the bottom 20.
See, he wants to see it. This is the whole problem here, and this is where I'm going to go right to Mark Douglas. What he wants to see in the world, his expectations. And when you can tell by the way this guy talks, it's very particular. He wants to see certain things. I'm going to tell you what, you got to be just so not expecting anything. You have to be open to possibilities that are beyond your expectations, because you never know when something's going to go wrong or right. So all sorts of stuff happens, and I knew this. I look at all these filters. I remember reading books like this. Oh, is that 20%? Hey, don't take that trade. I backtested it with your 20%. It was making money. It's crazy. Like, how are people trading like this? You should see how much this guy gets. They love this guy.
20% of that bar, of the range of that bar. Otherwise, it's not a strong bearish bar, and therefore I do not count it.
Those are trades. These are all trades. I can see. Can't everybody see every trade on here? What do you do? Small body. What do you do? Right. The smaller the range of the whatever the previous ATR. Look at this nice small range, right? And not just one ticket, right? You got to have 100 separate trades running. You need 100 tickets running. Nobody wants to do that work. They just want to have some EA trade. Nobody wants to put all those orders in.
So that is the second issue. Now let's go on and look at a third issue that you must consider. Okay, so here's the third issue, and we'll look at these two bars here. And you'll notice how, my drawing isn't very good there, let me redraw that. But you notice how the green bar is really long, real wide range from low to high. Now, first of all, it is closing near the high, so that's good, within the top 20% of the range of the bar. The real body engulfs the previous bar's real body. But the range of the bar is very important. You see, so for example, we get other bars that are engulfing. Well, here's one here. We can even talk about this. But that's not a great signal. Why? Because those two bars are very narrow range bars compared to...
This is the engulf back here. See, people got this concept that it's got a little wick. You're overdoing it. You're just overdoing it. Okay, this is an engulfing right here. We just engulfed. Okay. And then we engulfed again, and then we engulfed this one. I don't care that it didn't start down here and do a real engulf. That's complete garbage. Here, like, who the fuck here? This is a real engulf here, right? There's an engulf. It just means that we went up against the tide. You're overthinking it. Stop it. It's a hammer. Okay, buy here, stops here. Buy here, stops here. Oh, you got stopped out. Yeah, because there's a trade inside of this wick. You got to trade the wick. You got to buy new lows. You got to buy the stop hunt. They only call it a stop hunt because people think they're trend traders. It's a stop hunt because you're a trend trader. Yeah, you got a trailing stop. Oh, they stopped me out, and then it went up. But it's a good thing they stopped me out that time, because look, it came all the way back here and engulfed this whole thing. Right? So on a different time frame, this is a complete engulf of this section. How far is it going to go down? You don't fucking know. So you just buy. and you sell when it goes up. You sell like this is the bears are getting their traps. Their money management bots are getting stopped out here. Or just people, right? People. There's a money management sell. The guy went short here, and he was like, "Oh, look, just keep tanking." So I put my stop here. They stopped out the bear, and they continued down. But as soon as we take this wick out, buy, buy, buy. And it's this hard down, buy. This is the engulf right here. That's the engulf right there. It went up against the tide. This guy's so ridiculous. How in the... When a guy misses, and there's a guy commenting in there like, hey, you missed this and that's down an engulf. Yeah, right. This guy completely doesn't understand. This is an engulf. This is an engulf. It doesn't have to go 20%. Dude, it turned around. Okay, it's a hammer. If you take this and do a 2-day chart, this is a hammer on double the time frame. This is the hammer. Can't anybody see that? Just tell people, look, when you see this, this means there's probably double hammers and dojis living on the 4-hour chart.
Do the rest. So when we talk about narrow range or wide range, we're talking about relative to previous bars. I want to see that range be at least 20% greater than the average of the last 20 bars on the chart.
And the last 20 bars on the chart, this is where I just come unwrapped. The last 20, what the fuck? Dude, you stepped so far away from the market. What is it? Is this guy kidding? He's addicted to 20. There's a 20, he's got 20 issues. How do people even tolerate? Why are there comments just going, what the fuck are you talking about? Like, why aren't the comments on the section, supposedly you attract, I don't know, I guess people that, and then once some guy on the thing says, I'm not a troll, he's like right up front, I'm not a troll, but what the fuck, you got your head up your ass, right? My God, man. I don't know. I guess it's just something about tolerance. I don't have any tolerance.
It's one way of measuring it. You can use other standards if you want to, but that's one that I do. The reason is because if you just get little narrow range bars, I mean, here's another example. Okay, right up there. We get an engulfing bearish pattern. But look how narrow range they are. So whenever you get narrow range bars, that just implies neutrality. There's not strength in one direction or another, as opposed to here, we've got another engulfing pattern. But see, it made a higher high after that. But then after this, the dominant energy is very strong to the downside. It's a wider range bar, and the market does continue to go down. So look.
So where do I get in?
At the range of the bars. Now, number 4, I'm going to give you 2 bonus ones as well. So number 4 is that you want the entry or this pattern to come at the beginning of a new trend or coming out of consolidation.
But dude, please tell me in all that's holy that you bought down here at this fucking gravestone. How often do you see that? When you see 2 dojis in a row, aren't you buying this? Obviously, it's a low volatility accumulation from open to close. The market didn't go anywhere. That's right. The market didn't go anywhere. Look at this next candle.
Consolidation. So
how can you fucking miss this body here? He claims he knows candlestick trading. Dude, if these aren't the most important candles on the whole fucking chart, I'm sorry. This is the most powerful signal in the world. Look at this fucking gravestone. Are you kidding me? You could have had a stop here if they didn't take you out. Mind-blowing. And this top dog trading, this fuckhead.
In other words, if I got a bullish pattern, a bullish engulfing pattern up here, I wouldn't be too interested. But see here, we're continuing down, and to get a new impulse move up, yes, that's what I want. And that just goes with the principle of the trend is your friend until the end. So I don't want to...
That's what you want? But you're doing after the fact analysis going, there's the engulf. So did you ride the engulf? I mean, right? Where are the tradings? Where do the trades come in here? For the love of Pete.
Trade a bullish pattern and in an extended bullish trend. I want to catch these patterns early in either a consolidation pattern or at the end of a bearish trend to the downside. So same thing here. We've had a basically kind of 1, 2, 3, 4, 5 swing pattern. That's not necessarily a wave pattern, just a swing pattern. And then we get a bearish pattern. So that's a little more interesting for me. Well,
it's more interesting for me. I love these guys. That's a very interesting pattern. Let me take a piece of artwork. Yeah, that's right. But seriously, how does this guy... He can't be a trader, right? Like, he can't actually be like, can't he just bullshit us and go, yeah, dude, look at these dojis. Like, this is where you light the candle. Or this is the candle's fried out, I guess, right? Wax is gone. Yeah, this is the end of the party. Party's over, right? When the candle's in full tilt mode, this is when she comes over, and then wah wah wah. Right, candle melts down. All right.
Well, this video got a little longer than I thought, so we're going to do a part 2 to this, and on that one, I'm going to share with you some other things that you need before you can trade candlesticks. Absolutely critical. But if you like this video,
Absolutely critical. Man alive. Oh well, this is what we live for, right? Is this bad learning? But yeah, I wish we could have saw some trading here today. Oh well, better luck next time.